The following is a Simpronto media production.
Leaders, real life leaders.
Hey guys, I am so excited because I've got two amazing people with me today. We are going to be talking about the PPP, and if you don't know what the PPP is, then you need to stay tuned to this because it's super important. So there's been some major changes since our last call, and now that the application process is open, we wanted to give you some information on some of the things we found. So I've got Heather Rimmick here, who's just a genius on this topic at this point, and she's done so much research on it. And I'm also joined today by my accountant, Maria Reich, as she has even more knowledge about all this. So let's get started and let's ask a few questions, and you can hear the rest of this. We're going to talk about it a little bit, but download our podcast, the Real Life Leadership Podcast. It's called Real Life Leadership. And so let's first let's update everyone just a little. If you didn't listen to our last show on this, Heather, give everyone just a little update on what we talked about last time, and then we'll dive in with what the changes are.
Perfect. So basically the PPP is the Paycheck Protection Plan, and this is basically part of the $2 trillion CARES Act that the government passed, and it is basically allowing money. There was $319 billion set aside just for this particular program to help people who are not able to pay their employees during this time. So basically what you're allowed to do is calculate, in just a nutshell, calculate your payroll cost, which includes benefits that you pay them, taxes, like different types of taxes, etc., and then average that to get an average monthly cost based on what you paid in 2019. And then you're able to apply for 2.5 times that amount. So just as a basic example, if your average payroll for the month was $10,000, that would be 10,000 times 2.5. That means you could apply for $25,000. And you're able to use this money once you are approved over the next 8 weeks to pay your payroll expenses. And then you can use a little bit of it also for rent on spaces that you might lease, utilities, if you own a building, the interest that you pay on that mortgage. And basically, if you use it in accordance with the plan, meaning you're using at least 75% of it or more for payroll cost, and then the little bit of leftover you could use for utilities and stuff, as long as you do that, then it can be 100% forgiven. So it is a really awesome plan that they've done for small businesses. So this is any business that's less than 500 people. There's a few exceptions to it. Like if you're in the restaurant world, it gives you some exclusions that it would be like 500 people per location, et cetera. But you can look all those up on SBA.gov. And then it's also going to be rolling out for independent contractors and people like that. That's coming up soon too. So that was kind of in a nutshell.
I also want to mention that there's also the EIDL loan, which is Economic Injury Disaster Loan. And that's where you can get an advance up to $10,000 within 3 days of application of being approved. But right now, only the $10,000 is forgivable. The rest of it is at a business loan. And that's a little bit higher. It's like 3 point something. Do you guys remember what it is? Maria, do you remember what that?
Yeah, hold on 1 second. I do have that.
It's about 3.5, right?
Yeah, 3.75% for businesses and 2.75 for nonprofits.
Right. And so the $10,000 is forgivable. The rest is a business loan that'll have to be repaid unless some future Congress Act forgives it. But it gives you a much higher loan amount than the PPP. But again, here's the big kicker. You can't do both. You can do one or the other, but you can't do both. And I know already, I've known some people, we personally have some friends that have said, oh, I'm doing both. You can't, right?
Yes, that's correct. Yeah, you have to choose. You can get the $10,000 advance, and that can be rolled into the PPP if that's the one you choose, but you do have to choose. You cannot do both.
Okay, so let's talk about the guidelines. So last week, when we talked about this, we were being told in the initial guidelines that they were at a 0.5% interest. But when the final guidelines came out, surprise, it increased to a 1% interest rate, which 1% is still really good, but it did increase. And they kept it the same with 2-year term. In the first 6 months, you don't have to pay, but the interest does accrue during that time. So I want to talk about the interest rate accruing, and I want to give some real life examples of what that means. So let's give some examples of what that is, and let's talk about, because sometimes people don't understand compound interest and how that works. So who wants to talk about that?
Maria?
Oh, do you want me to? Okay. Yeah. So for the amortization, the way that works, when you get a loan with a bank, it's a little different. So they're going to take your interest rate, they're going to calculate it out, and they're going to put that across the loan, but it's not a flat fee. So you can't just say 1% of the loan and then divide it by 12 if it's a year loan, or by 24 if it's a 2-year loan. You're going to actually have to do it by an amortization schedule. You can find those on bankrate.com. That's a good one, has a lot of good calculators on there. But they're actually going to
bankrate.com. For those of you who didn't hear that, it's bankrate.com. But let's do this, Maria. Let's give them an example. At least it's not going to be exact, but let's pretend for easy math. Let's say someone borrows $600,000. And that's how much they decide to do for the PPP plan.
Yeah, so if you were to do $600,000, you would calculate that out. Under the amortization schedule, that actually ends up being, pull that back up real quick. So for example, say your payment started in May, you're going to have where a certain amount of it's going to go towards the principal, the interest, just like a normal loan, but you're going to have interest heavy up front. So they're going to make sure that they get a bigger piece of the interest on the first payments. In that scenario that you gave, like they're probably going to take something like,
well, if you take 6,000, if you take 600,000 and you multiply it by 1%. Now, again, I'm simplifying this, but 600,000 times 1%, that is 6,000. If you take 6,000, you divide it by 12. That's approximately $500 per month that you're paying for interest. But it's not that simple because, like you said, they're taking that money and they're wanting to get more of the interest. It's just like any loan that you take. Most of the time, the loan in the very beginning, they're taking more interest in the beginning and then dividing it out. It's compound interest.
Yes. So it's going to be higher interest up front and less principal. Now, that being said, I haven't heard that they're excluding where you can make extra payments or anything towards the principal, but it is definitely going to be, the interest is going to be more up front.
Well, and the other part that makes it weird is the fact that you don't have to pay anything for the first 6 months. Yeah. There's really no like house loans or car loans that you've ever seen where you say, okay, for 6 months, you're not paying anything. So that adds to the complication of it. Let's talk a little bit about adding employees back, because I know I've heard people who've said, okay, well, this stinks, right? Maybe they were like, okay, I can't afford right now to pay these employees, so I'm going to lay them off. And now all of a sudden they're like, well, if the government's going to pay for them for 2 months, I'd rather have them back. So now what do they do in that scenario if they've already laid these people off and now they're like, I'd rather have someone for those 8 weeks?
Yeah, so and we always preface this with saying, obviously it's changed since we told you what we learned last week. And so none of us are experts at this. You should always reach out to your CPAs and your HR attorneys on any of this. But what we understand it to be is in the application, you're going to state how many employees you had as of February 15th. And so if you have less than that right now, you can bring those employees back. You're able to bring them back at whatever rate you need to. So you could bring them back at the exact same pay rate, if you need to bring them back at a reduced pay rate, or if you want to bring them back at a higher pay rate. It's totally, it's kind of up to you. If they were let go of and you like offboarded them, if you're bringing them back on, re-onboarding them. if they're with you as of today, or they're still on your payroll, then you would have to keep them at the exact same salary. You can decrease their salary if you needed to, but that's going to affect your forgiveness. So there's two kind of different scenarios here from what I understand, and then I'll let Maria correct me if I've misunderstanding it. Basically, if they're not employed with you right now, like you let them go, you fired them, laid them off, you offboarded them, and you want to bring them back, you can bring them back at any pay rate that you want. You're re-onboarding them as a new employee. If they're currently on your payroll and you have to, for some reason, reduce their payroll, if you reduce it past a certain percent, then that will affect your forgiveness, because part of the forgiveness is that you're keeping your exact same number of employees, meaning you're able to maintain your employer base. And this is helping continue to have people have jobs. That's the whole purpose of this throughout this next 8-week period. And that you're not reducing their salary and giving it to someone else or giving it to yourself, that you're continuing to keep them at their same pay rate for the people who are currently with you. And as long as you do that, then you're eligible for forgiveness. When you start to either get rid of people or reduce their payroll, that affects your forgiveness percentage. Maria, do you want to add anything to that? Or?
That's correct, Heather. Yeah, so the biggest part is you want to keep a consistency, because that's what they're using as your basis. So at the time of getting the loan, what you're approved for is based on that amount of employees and that amount of payroll. And if you start messing with that, you can do that. You can reduce either the employees or the pay, each of those corresponding up to 25%. But again, even a small reduction, you could be messing with what's forgivable, because they're only going by what they know today. So if that changes to any degree, or if they say 10%, or if they say 15 or nothing, it could change. So it's best to say, this is what I can stick with, get the loan, stick with it. And then that way you know that you're in that line to get it forgiven.
Well, we also need to talk about, some people might say, I don't want those people back, the people that they fired. They might have let go of them because they had a bad attitude. They weren't a good employee. So let's talk about the fact that they actually could hire someone in their place, because we don't want people to think, hey, you're handcuffed. Listen, I can tell you right now, my patience level, if you are an A-level employee, I'm going to die on the vine to keep you. If you want to be slack off, if you want to have a bad attitude, this is not the time, gang. Like, I am not putting up with that right now. Like, wash your hands, like they say. You're gone. You're out of here. I need my A players. And so let's talk about that real quick.
Yeah,
yes,
so
that is true.
Go ahead. Yeah, go ahead, Maria.
Sorry, that's okay. I was like, that is true. If you brought someone to replace, they're not saying it has to be the same. It just has to be, when you get the loan, whatever say you get the $25,000, I think that was the scenario you used earlier, Heather, then in that scenario, that's the people you'd have to replace, is that $25,000 of payroll. So you'd have to maintain that if you want that portion forgiven.
And we need to talk about the number of employees. So you would look at, what were your number of employees on, what was the date? February what?
15th.
15th.
Mm-hmm.
February 15th, you'd look at what the total number of employees were. So let's say you had 40 employees starting February 15th. Then they're going to look at, how many employees do you have after this 8 weeks is up, correct?
Mm-hmm.
Yes.
So from what I understand is, once you made application and you get the loan, let's talk about the payroll cost, okay?
Yeah.
Because there was a little change in what was included in the payroll cost, because that did change in some of the calculations, right?
Yeah, it did. It did. Yeah, actually, in our payroll provider, we have one of the biggest ones, like, in the country.
ADP.
Yeah, ADP. And they had to, like, re-push out reporting because what they had originally set up changed in the final hours of the final decree. So it did change. So basically what we told you last time was that your payroll cost, which is the amount you're allowed to say is, that's the monthly amount that it's kind of basing off, was allowed to include salaries, insurance premiums, your state and local taxes, and like any type of benefits you give them, paid time off that you've paid, stuff like that. But the salary part was the capped at $100,000. So if somebody made $120,000, you could only claim $100,000 of their salary. Well, what changed was that $100,000 cap now included all of their benefits. So that included paid time off, that included the taxes you pay on them, that included your insurance premiums on them. So you could have now had it where it was, from what we understood before, the salary capped at 100, but you could still include the extras that you pay for them. Now the whole thing capped at 100,000. So you could have an employee that you pay an $80,000 salary to, but they now well cap over the 100,000 after you've paid their taxes, after you paid their insurance, after you give them a 401k plan. So we had to go back and manually recalculate what they allowed. Now they did add in some federal taxes that weren't previously included, which was Social Security and Medicaid. Yeah. So basically, so you got it helped a little bit, but there was some big changes in numbers in what we originally were seeing, which could have been a loan amount versus what it ended up being. So it wasn't necessarily just these people make over $100,000 salary. It's these people make over $100,000 total benefits, taxes, out the door package. So that did make a difference in what we were allowed to calculate as our monthly payroll cost times the 2.5.
All right. And for sole proprietors and independent contractors, yours are wages, commissions, income, or net earnings, right? Those are capped at 100,000.
Same. Mm-hmm.
So what I'd like to do is talk about applications. What have you seen by going through those, like some of the different things? I know one thing that you said, Maria, that was really important, and I'd like you to share with everyone, is that talk about the SBA guidelines versus, say, SunTrust guidelines or Chase's SunTrust guidelines, because that is very important. Can you talk about that?
Sure. So the biggest thing to keep in mind, there is SBA guidelines, government guidelines that were released, and they're very clean cut. It's supposed to be a streamlined program, very easy for small businesses to qualify with. And they were, under the 500 employee was the easiest one. That was the first option. There's a bunch of other options too on the application, but that's one that applies to most of our small businesses. The other side was you had to have payroll. So obviously you have to be running payroll. So if you're someone who's never ran payroll, you wouldn't qualify for this particular program right now. But that being said, from there, it kind of goes into bankers' world once it gets handed over to the bankers. So they might have additional guidelines. The important thing, I guess, to keep in mind with this product, it is no personal guarantee and there's no credit check. So for those of you that maybe have tried business lending and been declined or understand how business lending works, most of the time they want the owner to have a personal guarantee, and most of the time they're going to want to check the owner's credit worthiness. They're going to pull your credit score, they're going to do that. That's different. This loan, they're not required to do that. That's not part of the loan. So they're going solely off of a person's payroll. The reason that this makes a big deal with the banks mainly is because now a bank has to take a risk that not only is this person, yes, you're giving them payroll figures from 2019 or even a couple of months ago, but now they're at a period where they have to decide if you are going to keep the payroll, you're going to make it where they're going to get forgiven. If it's forgiven, they get paid by the government. If it's not forgiven, meaning you spend it on something else, or you can't prove that you kept payroll, you didn't rehire the people, you didn't meet the obligation, it turns into a bank loan at that 1% under their terms, under their due rates. And suddenly now that bank's agreed to give you a loan with no personal guarantee and no credit check. So as you can see, that's caused a big conundrum for our banks, because banks are more, that's not their conservative nature. They want to have a guarantee they're going to get paid back. And the portion that turns into a loan, if it's not forgiven, the government is not backing that portion. That's the bank who backs that. So it turns into a loan and they're responsible. And at that point, they've not received some of the stuff that they've always done in the past. So it is making it a little bit different as far as the lending and what you're going to encounter. Each bank is going to have their own rules, because essentially they're trying to screen out the people who might not use this appropriately, maybe they're going to get the money and maybe their business is going to go under. They're trying to rule out the people that could be risky. So they're going to be more likely to go with kind of the steadfast, like someone who's been around a long time was, they're just going to scrutinize it a lot harder. Now that doesn't mean that you're excluded from the program. You still qualify. You can still get it. It just means that you might not be able to get it through your traditional bank. It might be that you need to seek out just an SBA lender on the general market if your bank is declining you.
Hey guys, I want to take a minute real quick to tell you about this retreat that I'm putting together. It's going to be just 10 lucky people that I'm going to select, and we are going to stay in a 5-star resort in Miami, and it's going to be pamper time. But the most important thing, I'm going to open up my books. I'm going to show you everything. You're going to leave there with my Word docs. You're going to leave with a USB drive with all the information that I've possibly done, every system in place. A lot of times you go to these conferences, you get all jazzed up, but you don't walk away with anything. You're going to walk away with this retreat with tons of systems. Go to chantelray.com/retreat to learn more.
Calling all entrepreneurs, leaders, and business owners. Are you looking to grow and scale your business to help more people, increase your profits, and build the business of your dreams? Then you need to attend the Grow and Scale Now Summit, a free virtual event where you can learn from top leaders and thinkers who have grown and scaled their businesses by the millions. Unlock your potential and discover the secrets to take your business to the next level. Click the link in the show notes to claim your free ticket.
Oh, here we go. My name is Laura, and I own a counseling company, and I have 2 people that work for me, but they are 1099. What do I do? I do have my own S Corp. Can I use the PPP for my 1099s?
So basically the answer to that is the 1099s are going to be able to apply for their own, and we're being told April 10th, but we all know that our April 3rd deadline or open date was not April 3rd. They weren't ready yet. And it was really like 4th, 5th, 6th, really, for a lot of banks. And so I would expect it not to go live on Friday. I would hope that it does, but they'll be able to get their own. So if Laura pays herself a salary as a business owner, and she runs payroll, then she can do PPP for herself. But she cannot do it for her independent contractors. They will get to do that for themselves.
What other advice do you have for those independent contractors?
Maria, have you seen a lot on the what they're going to be allowed to do?
So I don't know the caps or the actual amounts yet. They haven't really released that information or made it exactly clear how they're going to calculate. My understanding is that it's going to be something that's supposed to help them get through this time. I just don't know if it's going to be as high as the 10,000, more I don't know if it's going to go on what they're being paid. They've not really released those figures yet to know how it's being calculated. We just know something's coming. And I've also been told it's not only for just 1099s, but also like freelancers and people that own their business and like haven't taken a payroll. So it's supposed to be something that supplements all these other people that didn't qualify.
So I have a question here from Katie Redford. It says, what if you're an S Corp and take draws from your business? How does this work?
Maria saying no.
No, that does not count. Those are considered equity draws. So basically at the end of the year, when you claim your total equity, your total profit, that's the money you took throughout the year. Or it should be sitting in your bank account, one or the other. So, but that's what that money equates to. Now, that being said, I have heard that this new program they're kind of rolling out for the subcontractors will include something for owners that just take owners' draws, but they've not released any details. They've not really been clear on how that would be calculated. So right now, my small businesses, if they just take owner draws, we're not sure how that's going to look right now.
They need to actually run through a payroll service to be able to claim anything right now.
Mm-hmm.
Yeah, so she had an S Corp and she was an employee, even if you're the only employee of your business, you're the owner and an employee, then you could get it for yourself as the employee, but
for
not
whatever you for whatever you pay yourself through payroll.
So you would figure out your payroll. If you gave yourself $1,500 a month, you would take that times 2.5, and then you would put that in.
Yeah. And you'd be able to include any like taxes you pay on yourself, or if you give yourself a retirement plan, anything like that you can add in, but it has to be run through some type of payroll service.
So let's talk about, I know, Heather, you filled out the form for our company. Let's talk about some really important things people need to make sure that they do when they're filling out their form?
Yeah, so the actual SBA application is very simple. It's only like 4 pages, and almost 2 of them are nothing but disclaimers, like saying I agree to this, I agree to that, I agree to this, I agree to that. It's really simple. I mean, you just put your company's information in, meaning your, like, what kind of, are you an S Corp? Are you an LLC? You know, you have to tell that. You give your tax ID, you give your principal place of business. You have to fill out your ownership interest. Anyone who owns over 51%, you have to list them on there and how much they own, and their particular information, like their social security number, just so they have all of that. And then it literally is so simple. It just asked for your monthly average payroll. It had times 2.5, and then it had a box. You filled that in, and then it said number of employees. And other than that, I mean, you filled out you had to answer some questions, like the people that you're paying are residents of the United States. That's a requirement. There was a couple other things. As far as the SBA application, that was pretty straightforward and simple. Then you get into your actual lending application. And so, for instance, in our lending application, I had to put the owner's name like 12 times. And like, for instance, I forgot one letter on it once, so I had to go back and redo the whole thing again. The
amount. You have to put
the amount I had to put in like 3 to 4 times.
If you're not detail oriented, I'm going to tell you right now, do not pass go, do not collect $200. Get someone to do it for you, or do it with them that's extraordinarily detailed. Because if you accidentally miss one number off of there, you're not going to get approved. Let's talk about how soon people are getting approved for this. So let's say you turn it in today. What are they telling you that you're probably going to, how long does it take to get approved? And then from there, how long does it take to get the money?
So what I've been told is the SBA are actually assigning loan numbers pretty quickly right now. And they've had people, like, if you processed your application this morning, you may have an SBA loan number as early as this afternoon or tomorrow. Once you have the loan SBA application number, then the banks can start to process the money. And then we're hearing that once you have your loan number assigned, you could see the proceeds in your checking account within the week. So they are trying to get this money out to you as quickly as possible, because, the economy really needs it right now. So we're seeing it that quickly. At least that's what I'm hearing. Are you hearing anything differently, or is that about what you're hearing, Maria?
Yeah, I mean, I would just kind of probably say with that, it depends on the bank, and it depends on how they're handling the transactions. If they're open, if they're sitting on loans, if they're actually processing, there is a key difference between that. There's some banks that have said that they're taking applications, but actually on the backside, we've heard they're not doing anything with them yet. They're going to wait to see how this plays out a couple of days, which means that you might have been essentially think you've applied, but it might not be going anywhere quite yet. So I would say with the time frame, like, patience is probably key, as with anything with the government, unfortunately.
And I'll say,
but generally it's going to come always on a time frame that's a little delayed than what we thought.
And also, just, I mean, I think they broke the internet when it initially went out, like on Saturday. And so I know, like, DocuSign broke yesterday because so many people are trying to sign. So there is a lot of people applying, and this is a first come, first serve basis loan. So if you're thinking about it, don't think anymore. Like, you need to get in contact with an SBA lender and apply, because you don't want to wait till, it's too late, because the money will run out. There's a lot of small businesses that need help and that are going to be able to benefit from this. So just be patient, but really stay in contact with your commercial banker, like Maria said, or your lender, and make sure you have a great relationship and they're honest with you about whether or not they're processing your application or kind of letting it sit there.
So I do have a question that someone's asking. This is from Shanda Harris. It says, are there banks and resources that will process a loan if your current bank isn't processing or you're way down the line? That's a great question.
Yeah, so personally, for my clients at my firm, I reached out. I have over a couple hundred business clients that I deal with at my firm. I reached out a couple weeks ago to a business lender that I've known a really long time. He specializes in SBA lending. which means he's a broker. And so he has several banks that he works with. And he's been a resource to my clients, and he's actually getting them applied, getting them through the system. And there's been many that their banks have said, we're not lending anymore. I know I've heard from several people, some of the big banks are completely done because and
Bank of America is already maxed out.
Yeah. So that being said, when they say they're done, just so that everybody understands, that doesn't mean all the funds are gone and you're not going to get your loan. It means that one of the things they did, and I will have to say I feel is a smart thing, the big banks, they cap them at like 10 billion. So even though there's 300 and some billion, they can only do 10 billion, which means that each bank gets a chance. So you don't have these big house banks going and taking all this money for bigger businesses that just are under maybe the 500 employees, and then nobody in the small world gets it. That being said, your bank might say to you, they're out of money or they're not lending money. That doesn't mean the program's dried up. It just means that specific bank has hit their cap and they cannot lend anymore, which means you have to go somewhere else. And that's where you're going to see most of these SBA lenders. They're the ones that traditionally people don't think of. Everyone thinks of their bank when you think of lending. But SBA lenders, they've been in the market a very long time, and that's what they specialize in. There's quite a few like FundRidge and different ones that are huge, and that's all they do. They've been doing that for years.
Share your guys' contact, and I do want to give a shout out to a guy named Dale Sherman with Chase, and if you reach out to me, I can get you his contact information. But I will tell you, he has really just bent over backwards for us. He was like, you're the first person we're calling. I mean, just Saturday contacted us, Sunday contacted us. I mean, just really over the top customer service.
And Maria, where could people, so people are going to say, okay, well, great. How do I find an SBA lender? Is there a place they can go and see who are registered as SBA lenders? Because I know they have to be approved by the government. Do they just go to SBA.gov?
You can go on there and put in a zip code. I will say that right now, so a lot of the lending industry in general, there's big backers on the back part. So if you put it in right now, you're probably going to get all the banks that are near you. And quite frankly, if you've not already gotten your foot in the door at the big banks, and by today you're getting your foot in the door, you're probably going to have to start going somewhere else to look. Now, I will say a lot of the credit unions are going to have a lot of funds because they're not getting as overwhelmed. And a lot of banks that aren't considered traditionally the big ones like Wells Fargo, Bank of America, the big biggies, they're going to have funds because people aren't kind of knocking their door down. My guy's name is Chris Snyder. He's with Capital Atlantic. And he's been great. He calls me every morning at least 3 or 4 times every single day for the last week and a half, giving me updates. So that's how I know what's going on besides the IRS updates and the updates I get. But yeah, he's been very helpful, but he deals with SBA lenders in general. And as most people don't know, most of the time when you get an SBA loan, you don't get it from a traditional bank. When you get an SBA loan the old way, they put you in the system, and these SBA lenders that have specialized this for years and years and years, that's who contacts you. So it's not a Bank of America, it's not Wells Fargo, it's none of these banks that give you that loan. It's these guys, these other guys. And that's where it's probably going to end up, where most people are going to have to go to get it.
Awesome. What other last minute thoughts do you ladies have? Try to jog your brain. Any other things that people have been asking you, questions that, people are saying, anything you can think of?
I think one thing is people may be wondering, well, what if I have leftover money after I paid all my payroll expenses and I used the maximum amount for utilities and rent, but I still have some money left over? What am I able to do with that? And at that point, from what I understand, is it's a loan, and you can either prepay it back, and there's no prepayment penalties on this particular loan, so you could just give it back minus whatever interest you've incurred over the, if you only keep it 8 weeks or 12 weeks, whatever, you'd have to pay that little bit of interest back. But I also understand that, it's after your forgiveness has been, kind of determined, it is money loan that you could use for your business. Like if you wanted to use it on business mortgage payments or whatever you might want to use it extra, you're just going to have to pay it back by the 2-year term at the 1% interest rate. And so I've seen that question a little bit, like what happens with the extra money? Do I get in trouble if I don't use it all? What should I do with it?
Yeah, so the loan amount is on the payroll, and that's how it's all done. But that being said, the forgiveness is based on what you do with it. Technically, if you say you go out there, you get the loan, and then for something happens and you don't do the payroll, you don't do the other stuff, basically you've just gotten yourself a loan. So you have the 2-year terms with the 1%. There's not any repercussions for that. I mean, that money can be used for anything from what we've been told. It's literally just then you're alone. You've kind of bonked yourself out of getting anything forgiven. You're not going to get nothing forgiven at that point, if you go that route.
Yeah.
So you kind of got to choose, like, are you going to take it and use it as a traditional loan, or are you going to take it and actually use it for its purpose?
Let's talk about the whole idea. I know this is an extreme case, but let's just pretend, because I know people who've had this happen. Let's pretend that your payroll in last year at 2019, let's say was, just for easy math, was $200,000 per month. And let's say, over the course of the year, you've just been cutting payroll, and now your average monthly payroll is only $100,000. What would someone do in that case? Would they take the monthly amount of the $200,000, multiply that by 2.5, or would they take the current amount times 2.5 and discuss that and talk about how banks are dealing with that as well?
Yeah. So from what I understand is you can take up to, so it's like any loan, you can take up to what your 2019 average payroll was times 2.5. So if it was much higher in 2019, you can take up to that allowable amount. So that's what you can request. You don't have to request the whole amount. You could request a lesser amount, because from what I understand, if you want it completely forgiven and you don't want to have to pay any interest on it, then you're going to want to shoot closer to what you're actually going to use it for. If you take the larger amount, then you can use it for other things or pay it back. You just have to pay interest on it and or the full loan amount. So it's kind of like up to you as to how you decide to do it. Some banks are not allowing you, or they're being more strict on allowing for the bigger one because they put in guidelines, because that is riskier than, because you're now taking it more as a loan than the forgiveness. And like Maria explained earlier, they're taking a risk on you with no credit check, no personal guarantee. And some of them are just, they're being more strict. They're only wanting to give forgivable amounts so that they're not really on the line for $10 billion worth of loans. They just loaned out to people who they don't know what their credit is from mom. So that's what I got from it. Maria might have a different perspective.
Yeah, that's exactly right. Yeah. Now, I will say, if you're a new business, say you don't have like a whole 2019, you don't have that history, you can use January 1st through the end of February. You can use that as your average too and still qualify for the loan if you had payroll during those months. Because I know some people might be like, I just got my business off the ground and then this happened. So you can use that. But it's just like you said, Heather, basically you have to make the choice. When you take this money, what you spend it on is going to depend if it's forgiven or not. And I'll be honest, the bank's scrutinizing that because it does have a big deal to do with how they're qualifying people. And off of that, just to be said, something that's probably important to mention, just because the bank declines you doesn't mean you don't qualify for the program. You can still get declined by your bank and go to one of these other lenders and get qualified if they decide that they want to take the risk. It really is going to be a risk factor that's going to come more into play at a certain point with these, because there's going to be a bunch of funds left once the big banks cap out what they're allowed. And then someone's going to have to make a decision if they're okay with, letting that money go. And my understanding is the big banks are not going to get back more money right now. So whatever they were capped at right now, they're done when they spend that. So you're stuck with the other.
It's a crazy time we're in, for sure. You guys are so brilliant. Thank you for all your wisdom on this show today. We really appreciate it. And if you guys have a question on this, email us. We'd love to hear from you. Bye-bye for now.
Thanks for listening to this episode of Real Life Leadership. If you'd like to get the show notes or access more resources, log on to reallifeleaders.com/podcast to get the show notes from this episode and any other resources we might have mentioned. And also, we'd love to hear from you. Be sure to review or rate this podcast on Apple Podcasts to help spread the word. And if you have any leadership questions you want answered, email podcast@reallifeleaders.com.